All right, so we finna get started. Uh, everybody gotta start somewhere. So, uh, appreciate y'all. You know, first one supporting me in this, and so um, with this first lesson, often we forget about the basics, the bare basics of the market. Uh, what maneuvers the market, um, in which we lose sight of that, which can result in us losing money. So, um, this first lesson, I want us to get back to the basics, and then next week I'm gonna get into some more technical analysis uh, type things because I know we got a good grasp of the basics, but um, I just want to recap on that. And then next week we'll get into the technical analysis, actual hands-on part of the day trading aspect of it. So let me go to the next slide. So uh, the objectives for today is we're gonna do. I'm gonna talk about the importance of investing, uh, the deeper cause, the the true cause into investing and why it's so important to our lives and uh, our generations to come after us. Next one is uh, just the meat of this whole thing, the stock market basics, and then last but not least, I'm gonna talk about uh, the intangible things you need to be successful uh, in trading and investing. So um, I was watching my guy, Wall Street Chapper, and he asked the question, uh, "Are you going to be an asset or a liability to your family?" And I thought that was really deep because if you're not bringing anything to your family, if you're not bringing anything to enhance the financial state, the emotional state, spiritual, mental state of your family, then you become a liability. Um, and so the part of the part I want to say about investing is with investing, it creates so many opportunities, so many blessings for you and your family. So my first point I got here is says it enables the ability to create financial freedom and generational wealth. Um, a lot of people have different definitions on financial freedom, but we all have the same definition for generational wealth. And generational wealth is the ability to hand down assets through generations after you. But my definition of financial freedom, um, I say, will be defined by this quote under it is when you have financial freedom, uh, other words, well, uh, you can experience life to the maximum potential. And what that means is that if if your finances are taken care of, you don't have to worry about anything. Um, you can go buy that car you want. You can go take that family vacation you want. Uh, you can go get that dream house. You can go buy your mom a house. Whatever it is that you want to do in life, you can do it. And when you're financially free, you're not tied down to anything. And so um, that's the ultimate goal here. And so, uh, but the main one of the main things that got me interested in it was the fact that um, I can define my own value. What that means is that my value isn't set on um, what an employer bases my salary at or how much they pay me an hour. Uh, my income is a direct proportion of how much work I do um, and how much I can bring to the table. And so, um, don't trade time for money. Instead, your income is based on your self value. Um, Another thing that's so um, fabulous about investing is that uh, the financial potential is unlimited. Um, in the stock market and real estate, wherever investing endeavors you do, uh, you have people who have a couple thousand in their account. You got people who are multi-billionaires in their account. So it's all about what you make it. Um, Another huge part of it is that you gain a sense of ownership and assets. You know, with each share you buy, you become a part owner um, in direct proportion of how many shares you buy with um, with that company. And so, especially being a part of the Black community where ownership is very scarce, uh, it's important that we value the aspect of investing to not only profit but to become owners and have true assets and not all liabilities. And one great thing about investing in a company is that, in a sense, you make the world's greatest CEOs work for you. And what I mean by that is when you invest in a company, that company that company CEO is now uh, working to further that company, which in results puts money in your pocket. And so, just to touch on the importance of investment is a lot deeper than making $1,000 or $2,000 or even 10,000, 15,000, whatever. It's it's about what it can do in the future, what it can bring your family, and the potential that it has for you. So we'll move on to the next slide. So uh, for the people who don't know, and I get questions all the time, what is the stock market? So it's not a such thing as the stock market because there's 13, I believe, stock markets in the whole world. So what a stock market is basically a place where buyers and sellers buy and sell securities in the company. And securities, I mean shares, stocks, mutual funds, etc. Um, but the stock market or the stock exchange that us in America typically invest in is the New York Stock Exchange, which is on Wall Street. And that's why people typically refer to the stock market as Wall Street. And so that is what the stock market is. It's just simply a place where buyers and sellers buy and sell securities in the company. Uh, what does it mean to buy a stock? And how do you profit? So when you buy, uh, so to give context, so when a company uh, is introduced to the public market, they have what's called a market cap. So basically, the market cap it shows is a number that the company has set to be traded on the public market. And so uh, when you buy shares, depending on how many you buy, um, you're basically investing in a company, and you profit by um, when the stock rises and you sell your stock at a higher price. Um, the next section I want to talk about is sectors. So um, the stock market is divided into 11 sectors, and basically all the sector is categories. It categorizes the market. So you got the technology, you got the healthcare, you got the financials, uh, consumer that's discretionary. You know, you got communications and industrial, and you see the rest on the slides. But what's important about the sectors is that um, with with the economy and you got different presidencies, um, the the economy kind of dictates which sector is going to be uh, relevant in the presidency or the state of the economy. So, for example, um, I have it written down in my notes here. Let me go to it. So, with our new president Joe Biden, the top four sectors to look at will be healthcare, real estate, energy, and technology. And so this is important because when you're trying to pick out stocks to invest in or stocks to trade, you need to know which sectors are relevant and which sectors are going to underperform. And so um, always be current in the news. Always uh, be current with the way the market is maneuvering, so that you can have a clear understanding of each sector and which one is relevant and which one is not. Um, so market indexes. So a lot of people think that you can trade a market index, and you really can't. So a market index is pretty much a hypothetical portfolio of the companies that represents a segment of stock market. And so, uh, but the good thing about these market indexes is that they they show you which way the market is moving. So, like for example, you wake up in the morning, you're doing your pre-market scanner, and you can look at the Dow, you can look at the SPY, you can look at the Nasdaq, the Russell 2000, and you can kind of get a gist of where the market is going. But if you don't pay attention to it, you can come in there with the perception of, oh, the market is going to be green. In actuality, the market is red, and so you can miss a lot of opportunities, and you can lose a lot of money by not paying attention to the market indexes. So exchange traded funds, otherwise known as ETFs, are actually a collection of companies that work hand in hand with the market indexes. So, for example, you got the SPY, and that directly correlates with the S&P 500. And so this is powerful because you can, for one, you can actually trade the ETFs, but not only can you trade the ETFs, is that you don't have to necessarily pick an individual stock. You know, if you want to just start bare basic and you're looking at trading, you can just simply trade the ETFs because it's a collection of everything. And so there's your ETFs for you. So you got the bull versus bear market. To make this pretty simple, your bull market or your bullish markets is strong uptrend patterns. You got a lot of buyers stepping in, and the market is green. When I say green, it's going in an uptrend. And the same thing, and vice versa for the bear market is when you have a strong downtrend, market corrections, market crashes. Although all market crashes and all market correction doesn't result in a bear market, but a bear market is when your market's having a strong downtrend, a lot of pullbacks, not too good. And so I want to clear up this misconception about stock market crashes and also introduce you to a thing called stock market correction. So a stock market, let's start with a correction. So a stock market correction is when the market is overbought, and you got people that has pushed the market way above what it's actually worth. And so you will see pullbacks up to 10% over a span of weeks, a couple of days. And what it's basically doing is correcting itself, basically is putting itself back to the correct prices, correct ranges that it's supposed to be in. And so but the thing to know is when you're looking at these corrections is that you could think, oh, the market is crashing, oh, this, that, and the third. But you got to understand, it's a part of the market, and it's actually healthy for the market because if the market is continue to be pushed up and overbought, oversold, and it never has any corrections, it's going to crash. And not only is it going to crash, it's going to be a terrible crash. And so, like I said, the stock market correction is when it gradually pulls back to about 10% of his 52-week high. And so, but a crash is when the crash. Let me clear this up. So when people hear stock market crashes, they think about the Great Depression. They think about the recession in 2008. But actually, a stock market crash happens all the time. So we just recently had a stock market crash in March, to be exact, March 20th. Uh, the market pulled back around 31% when the COVID happened, and that resulted, just like almost all, if you look in history, almost all stock market crashes resulted from inexperienced panic sellers. So if you look in March, you had the COVID scare. You had the quarantine, you had the shutdowns, and so inexperienced panic sellers are like, everything's gonna fall, the economy's gonna crash. Let me sell everything while I can. And so as a result of that, market indexes pulled back around 31%. But actually, stock market crashes aren't always bad. So the experienced traders actually made more money in the stock market crashes, because when the stock market crashes, it was basically like the market on Black Friday sale. And so you got to know how to make money when the market is red, and that's something that I'll teach further on in this course, in this class. So stock prices and supply and demand. So supply and demand is basically, it basically talks about how the market prices move. So it's just like the new PlayStation 5 that came out. Demand was low, was capped out, but the supply was low, but the demand was through the roof. And so in results, that pushed the reseller's price through the sky. And then it's the same way with stock market and the price of companies. So each price has what's called a market cap, and they have a set limit of shares that they can be traded. And so when the demand and buyers are stepping in trying to buy that stock, is going to push the price up. And same vice versa on the contrary for on the downside. If the supply is high but the demand is low, and everyone's selling, and taking profits or whatever, is going to push the price back down. And so it's important to know supply and demand, because you got to know what causes supply and demand. So typically what causes is catalyst. By catalyst, I mean, you got breaking news, you got upgrades, downgrades of a stock, you got potential being recognized by investors, lack of potential recognized, great management. It's so many factors. The direction of the economy can do it as well. So it's important to know what pushes and pulls back on these prices. And diversification. So it's important as an investor to have a diverse portfolio. You want to have your long-term investments. You want to have your mid to short-term investments. You want to have your day trades, your dividend stocks, which is your preferred stocks. You want to have it all. And so the purpose for me even getting to day trading and day trading options is to build capital, because I know you take 95% of the average American, they're not gonna have 40, 50,000, 60,000, 100,000 invest long term and make some real profit. So I'm using this, and I feel like it's a great way to build capital, to be able to do long term investment, because honestly, that's where the real wealth is in long term investment. So that's just a general breakdown of the basics that you need to know. We'll get into further detail about market concepts, because honestly, I couldn't cover everything at once, how much it is in the market. So to what we actually here for, options trading and the basic concepts of options trading. So with trading shares of a stock, it's simple. If you got $100 and the stock is $10, and you want to invest 100, you get 10 shares. If it goes up $5, you just made $50. But one reason why I got into options trading is how profitable it is and how cost effective it is. Uh, Basically you get more for your buck. And so to go into actually what it is, uh, options you're not trading shares, you're trading contracts. So each contract um, gives you a which accounts for 100 shares. You don't really own 100 shares, but each contract is for a set time. So you can do anywhere from a week, you do 2 weeks, 3 weeks, a year, 2 years. Each contract has an expiration, and so and you have a strike price. And so how you make money off of it is basically, you have what's called a call or a put. So a call is if you think the option contract is bullish. And when we talked about bullish, that's strong uptrend, uh, buyers stepping in, prices rising. And so if you think it's bullish and buyers stepping in, you want to buy a call option and make profit on that uptrend. So uh, and what I like about it also is that you can make money on the flip side if the market is on a downtrend, is very bearish. You can do what's called a put option and make money on that. So, like I said, options trading over stock trading is cost effective. You don't have to really start with as much to make as much. Uh, it has great leveraging power. You can leverage little to no money to make a good, decent amount of money, and you have higher potential returns. And people want to say, I know it sounds like oh man, it sounds so good to be true. Why is it that I have higher potential returns? And it's because of the Greeks. So I'll go over this example that I have in here. So a stock purchase for $50, you get one stock for $50, but with that same $50, you can go buy 10 contracts of this company for $5. And let's say there's an option contract has a delta of 80, and so that means for each dollar that this contract, the company goes up, your contract will increase 80%. And so if this stock was to go up $5, you only get a 10% return for that one single share. But if on the flip side for option contract, you'd make 80% of that investment. And as much as profitable it is, it can go on the reverse side to it, and it can cost you a lot of money really fast. But that's why we have a lot of risk management, a lot of technical analysis indicators, to where we can cut those losses very small. So that's pretty much the basics of options trading. So if you see below, you got an options chain on Robinhood. I chose Robinhood for an example because it's the most user friendly, and it's very simple to understand. So for the strike price, that's basically, so right now you see the share price of Apple is at 219. I wish it was still at 219, but at 219, and you see right above it, you're right at the money. So in categorizing which options you want to buy, you got in the money, at the money. Well, let's do it in order: at the money, in the money, and out the money. So basically, when you add the money, your contracts are going to be a lot more expensive, but you have a lot more of a chance to hit your strike price because you're like right there. Like if you see, it's at 219, and then you got your strike at 217. So in 220, you can't miss. But certain companies you won't be able to buy at the money due to how much capital you have. So, but either way, if it moves in the direction that you buy your option, then you should be good anyway. So the intangibles, and I can speak from experience. This is more important than anything. Uh, and when I say this is more important than anything, I'm speaking directly to uh, discipline and emotional intelligence. So I can tell you from experience, trading without a trading plan, ignoring risk management, uh, trading with an emotional thought process and an objective process, and it's cost me some money. I will say that. So um, for one, this has to be um, something that you committed to because uh, unlike almost any other uh, work environment, work experience you ever had, um, this is a career path uh, or passive income endeavor that requires you to be uncomfortable, to be comfortable being uncomfortable, because you're constantly in an environment of uncertainty and risk, and unconsciously you're in a state of fear at all times. So you have to be committed uh, to the process. You have to be committed to learning, uh, and also with discipline, uh, with your discipline. You know, this is something that's easy to get emotionally wrapped up in because you know you're risking losing your money, uh, and you just don't know what's going to happen next. And so um, you have to stick to trading plans. You have to have a trading plan for every trade. But where the discipline part comes into that is that you have to be able to stick to the trading plan because you hear the term often. You don't lose money until you sell. You don't make money until you sell. And so you you can catch yourself in a position to where um, you go into a plan. You got your risk to reward ratio, which we will talk about um, next week, and you got your stop loss set, and the stock can fall, hit the stop loss, but your emotions kick in, and you're like, dang, I don't want to hit sell and take this loss, and then in actuality, it keeps going down, and you lose more money. And it can also work on the flip side. You got your target hit. The stock is rose, hit the target hit. Instead of taking your profits, your emotions step in. I can make some more money, or um, and you sell and you you lose money, or not necessarily you sell and lose money, but you don't sell and then it reverses on you, and then you do lose money, which does happen to me before. Which both incidences have happened to me before. And so you have to have discipline to stick to your trading plan. You have to stay disciplined to whatever works for you, and not let your emotions kick in. And with the emotional intelligence, every day when the market opens and you get ready to trade, you got to be able to be honestly assess yourself on where you at today emotionally, because if you don't have a clear mind and your emotions all over the place, you're prone to make irrational decisions. You're not gonna be able to think clearly. Uh, for example, you had a week, first 3 days, you know, were red days. You lost money, and so you do what's called revenge trading, and you're trying to make it all back. And instead of taking your profits, you know, you get greedy, it reverses on you, or you just get into bad trades, um, trying to make money and without a trading plan or any risk management set up, and you lost money just simply due to your emotions and not being able to honestly assess yourself and check yourself. So they always say, if you're not right emotionally, don't trade. Um, it's best to turn your computer off, walk away, because it's better not to make any money than to lose money. And so with these three things, it's easy to preach and it's easy to say, uh, I need to have commitment, I need to have discipline, I need to have emotional intelligence. But all three of those things are just like a muscle. You have to exercise them daily in order to grow stronger and be able to be the best version of yourself. Whether you feel like you have discipline or not, every day you got to constantly push yourself to increase that discipline, constantly increase the emotional intelligence, uh, invest more. Because I've seen if you invest more into something, if you commit more to something, it's harder to let go. It's harder to half-ass it in a sense. And so I challenge you every day you trade from here on out, or it don't even necessarily have to be trading, but every day challenge yourself to reinforce those things and have it a constant reminder in your brain. So um, 3 challenges that I have for you. Um, you can you can take these how you want. You can add more to it, but I challenge you to read 20 pages per day. Um, you'll be surprised how much you'll learn by reading 20 pages a day. Most of the time, it'll probably only take you 30
What,
minutes.
Jeff?
What's up,
20, 20,
Marco?
20 pages of what?
20 pages of whatever. Honestly, so I got a book that I can recommend. So I would recommend this book called The 10X Rule by Grant Cardone. Um, but for trading, I would say The Intelligent Investor. Uh, that book is really what taught me the most about investing. But I may honestly I may just get the ebook and then put it in the Discord server so that y'all don't have to go out of pocket for it. But I recommend the 10X rule because the 10X rule really introduces you to how can I take this to another level, um, whatever it is that I'm doing. And so that's the first book I recommend is the 10X rule. Uh, my next challenge would be workout daily. Uh, workout daily is so important because um, it introduces you to that training environment because uh, you're constantly uh, you have to be you have to be comfortable being uncomfortable when you're working out. You have to be able to say, "Man, this hurts." I'm tired, but I got to keep going and finish this workout. So, what that workout is, that's up to you. Uh, but I recommend working out daily because not only does it introduce you to being comfortable in that uncomfortable environment, but it also uh, it also enhances your mental state, uh, your self confidence, and all the intangibles that you need to be a trader. So that's my second challenge to work out daily. Um, and last but not least, I think this is a very underrated aspect of trading and life in general is that you have to focus on your mental and emotional state of mind, whether that's getting up in the morning, reading the Bible or watching a motivational video or sermon or educational video, self affirmation video, whatever it is. But you have to be in tune with your mental and emotional state at all times. So I challenge you every morning, wake up, uh, whether it's spiritual, personal development, but you have to uh, ensure that you're in tune mentally and emotionally. And so I want to say this is a group effort. Uh, I've been doing these things too. Because I don't ever want to preach anything that I wouldn't do myself. So, for example, not only have I been uh, reading every day, uh, work out with me and my wife, but um, I've been waking myself up every morning at 6 o'clock. You know, although that's something that that's required for trading because the market opens at 9:30 Eastern, and which where I'm at is at 7. But I've been waking myself up um, every morning, weekends, weekday, wake up at 6 in the morning. Just to make myself have some sense of discipline. And I wake up in the morning. Um, Not every morning I do the spiritual development, but I do it every day, whether it's in the morning or it's before I go to bed. But and another thing, uh, like starting January, I'm going pescatarian, and so I just challenge you to find whatever it is to constantly reinforce discipline, emotional intelligence, and to enhance your commitment to this whole process. So I want to say thanks for joining. If you have any questions, uh, please, please ask. And I want to let y'all all know that this whole month of January, I'm doing lessons to kind of put everybody on game, and then in January, we starting the 100K challenge. Well, I am, but if y'all want to join, y'all more than welcome. We get into the trading, and we get in the money. But yeah, if y'all have any questions, please.
Shit, I'm good, bro. That was thorough. I appreciate it.
Yeah, the main thing I'm getting out of it, you got to be hella disciplined because a lot of this shit, you got to just really be real in depth with discipline. That's the big thing for real.
Yeah.
Like when you were talking about vintage trading, trying to go back in, get your money back and all that. But a lot of this was real helpful.
Yeah. Appreciate it. Because I'm telling you, I've been like out of research and like, courses, books, YouTube videos. To be a successful trader, you have to be a great loser. And that sounds bad, and it sounds like, no, I don't even want to do this, but loss is inevitable in trading. You're gonna lose, but where you really lose is when instead of cutting your losses at $100 or $50 and then getting another trade and making $1,000 or $500, and in the result you have a green day. Instead of you cutting your losses, now you're down $500-$600, and and your portfolio can vanish super fast that way. And you got to be disciplined to avoid that. Oh, I think this is gonna go up without no research behind it, and you lose all your money because the trade goes south. And so, but if we can get the discipline aspect of it down there, and we get our trading plans right, which is going to come next week with the technical analysis and stuff, so we're gonna be good.
I got faith in it. I'm all in 100%.
Yeah, and like I can't express honestly how appreciative I am, y'all. Because y'all could have said no, not joined it, not believed in me, but I want to say thank y'all, and I'm putting in the work. I want to let y'all know that I'm putting in the work, man. And 2021 will be a good year.
Omar trying to get in on it. I ain't know how to promote you. I mean, like, how do you want to do it? Do you want to, just post it, or is it just for people like an insider for right now?
Nah, I mean, you could do Omar got Instagram?
Yeah, Omar got Instagram, but Omar, he really stays to himself. So if that's part of what we got to do, he gonna have Instagram.
Yeah, I mean, I could take Omar and I can hit him up if he's interested. But,
yeah, I was supposed to tell you yesterday before we started the lesson, but I'm gonna fulfill him because Omar really from the bottom, like he don't know about trading. Like he need to know like what political analysis, those type of strategies and nothing. And it ain't bad. It's just that he needs to know. Like
yeah.
It's just he a different type of learning right now. Turn right on 750.
And so I'm gonna put like right now I'm recording this video, and I'm gonna put it in the lessons tab. So if any one of y'all or Omar join, go back and reference this video to get the basics, because like I wanted to provide the basics, but I didn't want to get too in depth with it, because it's like we not stock traders. You know, we options traders, and so I wanted to. I picked out what I thought most affects options, and so if any one of y'all or any new body want to come, you know, they can go back and watch the video and reference it. So yeah. And oh yeah, one thing I want to tell y'all is in the Discord, make sure y'all got y'all post notifications on, because I'm gonna be posting a lot of stuff in there, and I don't want y'all to miss out just because I can see it. And so
All right, and I need help with the platform. What's that? Thinkorswim. I don't know how to use it at all. Like the YouTube
I don't know how
tutorials.
I don't know how to use that shit either.
Yeah, them
Okay.
YouTube tutorials. That shit just it's crazy. Like
I mean, I know how to place my orders on there, but Robinhood just looks so much easier. You know what I'm saying? Like Robinhood is really user friendly, but I know Thinkorswim is better, so I don't got the Robinhood no more. Like I do all my
Okay.
just on TD, but I still don't know Thinkorswim like that.
So I think with next week with the technical analysis video, I should add a Thinkorswim walkthrough in there as well.
yeah. On me.
Okay.
I
Okay.
like it.
And I can just share my screen and y'all can see it. Okay. Yeah, for sure. See, I need that feedback. Okay. But yeah, yeah, man, let's get to it. I'm excited. You know, honestly, I was kind of nervous at first because I was like, man, I don't want to let y'all boys down. But yeah, man, it's gonna be good. But if y'all ain't got no questions, I'll talk to y'all boys offline, and we'll get to it next week.
All right.
Or what's today? Today is Monday.
Mm-hmm.
Okay, yeah. I'll do another one Monday same time, because to fully. Hey, I'm gonna load the boat on y'all boys next week with this technical analysis. You know, that's my cup of tea. It's gonna take me a minute to put all that together. So yeah, Monday 7 p.m. Eastern. We're gonna be right back at it. It's gonna be a lot more in depth and give y'all a lot more insight. All right.